requirement. I'm looking at Hot C. It says using Exhibit 3, which we'll do in a minute, discuss how the land and its fair value should be accounted for in the year. Super, I can do that. Copy it, open my word processor and paste it in. So I've got my heading, there we go. And then we say, right, go to, I don't need the requirement anymore, do I? So go to Exhibit 3 and it says, on the 31st of December, which was the end of last year, we acquired some land for 10 million, okay? The intention was to turn it into an employee car park, so we're going to use it. So it is PPE, and this was properly recorded as PPE. And you could say, in your answer, you could say, yes, that's absolutely right because you're using it, no problem. Don't be scared of saying that. Don't think, oh, that's too obvious. We want to get marks. Put it in. Use everything in the scenario. So I've used that. Then it says, by the 1st of September, X7, the start of, no, 3/4 of the way through the year, the land hadn't been developed into a car park. So we're not using it because many employees started working from home. So we no longer required it. So we decided we're going to lease it out instead. So when you say lease it out, you think to yourself, I'm getting it for rental income. It's an investment property. You might not have thought about that in the exam, okay, but you will have done because in the next paragraph, the examiner helps you out. They classified it as investment property. And you could say, yeah, that seems fine, okay, because you're going to hold it out for rental income rather than using it. But they measured it at the original cost of 10 million. He said, well, you shouldn't measure it at the original cost of 10 million. When it goes from PPE, using it, to investment property, we've got to revalue it, haven't we? And where does the difference go? Can you remember? It goes to the OCI, doesn't it? It said they wish to use the fair value model in investment property. However, it's impossible to get the fair value. So here you would say, when it's impossible to get the fair value, you would use the cost model, which is very rare. It says, however, though, the examiner says, a nearby plot of land of very similar size with very similar legal complications sold in September for 11 million. Well, therefore, you say, therefore you can put a fair value on this. Yeah, if you know your fair value standard, you know that's kind of a level 2 fair value, but you could do it, and so therefore you should. So they should use the fair value model. So the difference of 10 to 11 going, the 1 million going to the OCI. Then it says at the end of December, the legal issues were resolved. They had a survey of it, and it's now worth 11.5. So it's now an investment property, and it's gone from 11 to 11.5. When it's an investment property, where do you put the difference from year to year? Hopefully you're shouting at me to the P&L, Richard, and you're absolutely right. So I'll calculate the fair value gain of 1.5 million. We're just talking about the 0.5 million here. And the 0.5 million would go to the P&L. The other 1 million would go to the OCI. You would do all that in your own words. However, I appreciate that some of you get a bit upset when I say that, so because you're not sure of your own words. But I'm going to show you the examiner's answer. Remember, the examiner's answer is given for you to learn from. It's not what it's expected. It's the perfect answer. So let's see what Mr. Examiner says. The cost of the land was correctly recognised at the start. Yeah, we said we'd say that. However, with the change of use, it will earn rental income and therefore should become an investment property. So the first paragraph, I'm sure you can put that in your own words. Then it says, stating the knowledge, investment property gives the choice, fair value or cost, yeah. And you would only use the fair value if the fair value is not reliably measured. Then you use the investment cost model, yeah. And we said that's very rare. It only happens in exceptional cases, okay. And then they talked about, look, this similar plots of land for 11 million. This would be level 2 or 3. We said that. And it says, look, when you had a PPE and it becomes investment property, you should record any difference between the carrying amount and its fair value in the same way as a normal revaluation, i.e. goes to OCI. And the extra 500,000, once it's become an investment property, goes to the P&L. Not really helping with my highlighting, but anyway, you could put that in your own words. What I wanted you to notice is we state our knowledge, not all knowledge of investment properties, but we state the knowledge that we've got that applies to the scenario, and then we just say, look, here's the scenario, here's the knowledge, this is what should have happened, and it becomes a very straightforward 6 mark.